Hey soldiers, for the sixth straight month, Blackstone has not allowed investors in its flagship real estate investment trust to get their money out of the investment. Is this some sort of indicator of a larger issue with Blackstone and maybe even the larger economy? Yeah, it is in fact, and it's one that we may be able to use to our benefit. Now, there's something else going on with Blackstone that we're going to get into that to me says, what a shift. What an amazing shift you just made. And that you're trying to paint it like it's all roses, but I think you're doing it because, quite frankly, you need the money. Okay, so we're going to get into that. We've reported extensively on Blackstone and this ongoing issue they've had. They actually defaulted, and we did a video on that. They defaulted on a loan. Now, some people have said, oh, well, they got tons of money, and they probably did this to some strategy, and maybe, okay? But I can tell you that defaulting on a loan is not a good look for a firm at that level, okay? And I cannot imagine that that was their first option, all right? I'm sure they kicked around some other ideas. And in fact, it was reported, and we reported on this, that they did try to get a different type of arrangement with the loan servicer, okay? But they couldn't come to an agreement. So they did not just voluntarily say, hey, let's just go into default on this loan. So they defaulted on a major commercial real estate loan. We'll tag that video. They have, for the sixth straight month, told depositors, or investors rather, in that Blackstone Real Estate Investment Trust that they can't get their money out, okay? So this is interesting. And we're going to cover that third thing that they're doing that I think is, the illumination of a trend. Now, Blackstone limits the real estate investment trust redemptions again in April. Blackstone on Monday, this would have been the 1st of May 2023, said it had again limited withdrawals from its $70 billion real estate investment trust in April as investor redemption requests continued to pile up. Blackstone said that the Blackstone Real Estate Investment Trust, we'll call it BREIT going forward, had received $4.5 billion worth of withdrawal requests in April, but the fund fulfilled only $1.3 billion, or 29% of the total redemption requests, the firm said in a letter to investors. Now, this is not illegal. It's not even unethical. And the reason for that is the investors did sign a terms and conditions in document stating that Blackstone did have this authority. Now, they signed it. How many people read it? Where was it? Was it, way deep down in the fine print? Who knows? Okay, they did give them this information. And real estate is an illiquid investment. You cannot just turn real estate into money like you can with a share of Coca-Cola, for example. Okay, trade plus two, you got your money. No, real estate's a little different. You got to find a buyer. They got to get financed, and it takes a while, okay? So that's the reason why Blackstone had this provision in the documents, in the, terms and conditions of this REIT, because just getting you your money like that, and we're dealing with an asset, illiquid asset like real estate, is not an easy thing to do. So nothing nefarious there, but I think that it is a sign that the commercial real estate market is under pressure. You remember what happened. Excuse me, guys. You had the country shut down. Millions of Americans left office buildings and started working from home. And a lot of those people have not gone back to the office yet. Now, there are a lot of people clamoring, oh, well, we got to bring them back to the office. But then there are a lot of businesses that have looked at the monthly expenses and said, you know what? They're using their electricity at their houses, okay? Sam Zell is out there saying that working from home is not as productive as being in the office. Sam Zell's a major real estate investor, old school guy. I can see why he would think that. But Sam, you're wrong. when you work from home, at least in my case, okay, in the case of people that I know, you get more done. You don't have to waste time on the commute. You're not hanging around the water cooler. You're not lollygagging after lunch, okay? In fact, when I worked for corporate America and worked from home back in, I worked from home some days and it was just flexible. But whenever I worked from home, I started working before I would have arrived at the office, and I usually ended my day after I would have left the office, okay? And my rationale and reasoning for that was I'm already home, So the stress level was a little different, okay? I could go down and get me a drink. I could, lunchtime pop over to the supermarket and change my scenery and that sort of thing. So, yeah, I do think that it is obvious that commercial real estate is suffering. And this Blackstone Real Estate Investment Trust heavily invested in the commercial real estate sector. All right, so you got those investors saying, this doesn't feel good, man. I want my money out. It must be a stressful situation because they need their money, okay? A lot of them want to maybe invest in different things because the interest rates have gone up, presented other opportunities to get a greater return possibly. And then some might just feel a lack of confidence in the real estate investment trust at this point because Blackstone has invoked this partial withdrawal rule. In March, BREIT had also received requests totaling $4.5 billion, but it fulfilled just $666 million or 15% of those demands. Redemption requests were $5.3 billion and $3.9 billion in January and February, respectively. This is an ongoing issue. Blackstone has been exercising its right to block investor withdrawals from BREIT since November after requests exceeded a preset 5% of net asset value of the fund. It has so far paid out $6.2 billion to investors who have been requesting redemptions since November, the firm said. All right, so that's kind of the first, that's the second shoe to drop. If we look at this ongoing issue with not being able to give the investors what they're asking for, coupled with the default on the commercial real estate loan. And then we got another issue that we're dealing with Blackstone, and that is their whole modus operandi, their business model has really relied on the well-heeled investor. So we're talking pension funds, we're talking, who else? Just wealthy individuals, hedge funds, things like that, okay? We haven't been talking about individual investors. Well, let's change gears slightly, and we're noticing, we'll get back to Blackstone in a minute, but we are noticing that a lot of these firms are kind of switching gears and saying, hey, look, we'll take the retail investors' money also. Now, not to be confused with Blackstone, separate company, BlackRock, they are pushing to attract more retail investors to ETFs. Now, they're doing this in Europe, okay, but it does kind of forecast a strategy shift among these big money private equity firms. BlackRock, we're talking about BlackRock now, not Blackstone, has joined forces with the neo-broker Bucks to offer low-cost savings plans that use exchange-traded funds in a push by the world's largest asset manager to encourage more retail investors across Europe to adopt ETFs, or exchange-traded funds. All right, so investors will be able to build investment portfolios of up to 10 BlackRock iShares ETFs in a so-called savings plan that will cost a flat fee of about €1 per month on the Bucks platform. Investors will be able to make portfolio trades that can adjust the allocations across all of the ETFs they hold for €1 commission, for a €1 commission fee, and the minimum required investment has been set at just €10 per month. This is in an effort to appeal to younger savers. Okay, so what have we got here? We've got, again, this private equity firm saying, hey, let's dip into this pool of money, represented by the retail investor. Okay, so what's Blackstone doing? They're doing the same thing, going after the non-institutional investors, another term for the retail investor. Blackstone launches branding push to attract non-institutional investors. They're upping their brand recognition game in a bid to attract mom and pop, you and me. Okay. Build with Blackstone. The firm's new tagline will be part of a campaign that signals the firm's commitment to delivering for institutional and individual investors by building strong businesses in dynamic sectors. This is according to a statement seen by Private Equity International. The campaign was developed to codify Blackstone's brand and identity as it grows its investor base and private wealth offerings. This is according to Ariel Gross Samuels, the global head of marketing at the firm Blackstone, and she relayed that to, I believe that Ariel's a she. Let's just call this person Ariel. Be on the safe side. You know what I'm saying? But that's what Ariel told Private Equity International. As we go to market and reach new investors, we want to make sure that our brand is better understood. Build signals transformational value creation, and with Blackstone signals a partnership in our ever expanding network and ecosystem. So what do you think about that? I think that Blackstone and BlackRock are big names. You got a lot of choices about where to put your money. I think that in the case of Blackstone, this is an attempt to say, hey, we got to get some more money in here. We just defaulted on a loan and we're having trouble paying these folks for the reasons I stated, because real estate is not liquid as other assets. So do I think that Blackstone is about to go insolvent? Absolutely not. I don't think that. But I think that there's some puffery going on. Okay. So I think that is going to inform us that the commercial real estate market is really, will it ever be the same again? Is it a sector that we should rely on in the future to bring us the type of returns that we're looking for? I don't know. Okay. To what extent is this new generation of folk coming into the work world going to be comfortable with working out of an office building in the way that my generation and generations before have done? Will we need the space? Okay. Now, sure, you will need, in this REIT, let's be honest, the REIT does not just include office space. There are other commercial aspects to real estate, including data centers, okay, where you house servers, okay, warehouses, all right, and the REIT does include some of those things. And I can't see that going anywhere anytime soon. Humans are filled with variables, right? So what I'm going to do is I'm going to continue to look at the mix of properties that this thing has. And if they ever offer it to, the mom and pop, maybe take a look and see if it's an option. But again, as I stressed in the last video, as assets get less expensive, it does present an opportunity. So with real estate specifically, and I stated this before, you've got rising interest rates, which can, in the future, not a certainty, but it has happened again and again and again, those interest rates can come down and give you an opportunity to refinance, make the cost of that property less expensive and more profitable for you if you are using it for income production as well as asset appreciation. Okay, so you're renting it out. Okay, so yeah, if sellers are under pressure to lower their prices because, as Blackstone is seeing, there could be some financial headwinds up ahead that, complicate matters. So if I'm selling a property and I just want to get rid of it, then, get some money, then I might have to lower my price a little bit. And as a buyer, you could take advantage of that, even though the interest rates are higher than they have been in recent years, but still lower than they have been in recent decades. Okay. All right, guys. So I want you to examine that and just, again, understand that even though Blackstone is having these issues, that there is opportunity. So what we've done is been able to look at the situation from an opportunity standpoint. Now, Speaking of opportunity, take a look at this video that we did. It's about Wealthfront. Excuse me. Wealthfront is a financial app, kind of like the Walmart or the Amazon of personal finance. Very interesting. And they've got two aspects of this program that are absolutely phenomenal. Blows away anything I've ever seen in this type of application. But will that make the difference? Is it enough for you to, sign up with Wealthfront? Check out the video and find out. Guys, I'll talk to you soon.